All right, gang. So in this course, we're going to cover the moving averages. So I'm going to teach you guys how the moving averages work. We're going to go over some application and a custom configuration as well. So let's go ahead and jump into it. Now, as you guys can see, I do have my Excel document that's open here. You don't have to worry about doing any math. This is just for illustration purposes here. However, I will include this document in the materials section of the course itself so that you can download it just in case you guys want to be geniuses on your own time to play around with it. All right, so the moving averages. What are the moving averages? The moving average is an indicator, okay, that helps traders to identify the trend. Now, I also use the moving average to identify support and resistance, and also entry and exit points. It tells you when to get in, when to get out. So I'm going to show you how to use it for all of those different things. And basically, all it is just, as the name says, it's the moving average. So we're taking, average, range of numbers, which is the stock price itself, and we're going to average them out. And this move's really mechanical because what it does is that it constantly replaces the old data point. It takes it off, remove it, and then it'll add the newer data point. So every day that goes by, it's going to update. Or if you're on a smaller time frame, it's going to take those time frames. So, you can use these on different time frames. Whatever the data set you're capturing in is going to do the averaging out mechanically, okay? So the platform is going to do all of this for us, but I want you to understand how it works, okay? So just taking a look here at our chart. I got a chart of Apple up here, and we have some data, which is you see the close point right here. This is the pricing of Apple. I have 100 points of data that's going for the entire year, basically, on this chart. And we're plotting an 8 moving average, a 20 moving average, and then a 50 moving average for this demonstration, okay? So when I click on this chart, you will see that we have the dates, and then we have the stock price, the closing price. And in the chart itself, the stock price is what's being charted, okay? This is an aligned chart, so you see a lot of wiggly lines. That's what it's doing here. This is just the stock price moving itself. Now, the stock price movement, all these little mountain peaks and valleys, that's a lot of noise there, okay? So it's like, which way do you go? Which way do you go? You don't really know because it's moving all crazy all over the place. So the purpose of the moving average is to actually give you a clearer view, remove a lot of that noise so that you can have a clear view, okay? Which you're going to be able to see this here. But let me show you the math, and you'll understand what I'm talking about. So the 8 moving average, we'll take a look at the 8 moving average in this column here. So this column here has the 8 moving average in it, okay? And what we have to do is we have to go 8 periods. In this case, we're using days, so 8 days. Okay, so the 8 days of data, right? And we're going to take all this data for 8 days, which is going to be in the closed column, the price here, and we're going to divide that by 8 because it's 8, periods here. We're going to divide it by 8. I have the number 8 right in this row right here. So the number 8 is in here. So we're going to sum all of these up, and we're going to divide it by 8. And then we're going to get an 8 moving average. So if you see here, that's the formula for this, okay? We have the column, the sum of the column here, and then we divide it by the 8 period. Now, in this formula, I have it fixed so that this 8 moving average does not move. But if we drag the formula down, it's going to allow all the blue, you see the blue indicator there? It's going to allow those sums to drag down with it, okay? So when I show you this, you'll understand better, okay? So I'm going to go down to the next period, and you'll see how it just moved, okay? And as I continue to go down, it's moving. It's replacing the old data, moving it to the front to the newest data point, and that's why it is moving. This is how they compute the moving average. Now, this is the simple moving average. So there's 2 types of moving averages. We have the simple moving average, and we have the exponential moving average. So the simple moving average is what I just showed you. This is what we have here on this chart, okay? This is what most technicians use. Now, there's an exponential moving average, which I'll show you guys that when we actually get into the chart itself. But the exponential moving average works pretty similar, except for what it does is that it gives more weight to the front end data points. So it's going to add some extra weight to it. So it's going to have, it's going to be more meaningful on the front side, and it's going to give less weight to the back end side of the data point. You don't have to worry about the math and all that stuff because you'll see, how we're going to use it. But I just want to explain it to you. That's really how it works. So in this case, we have 8 moving average in this column. And the next column, we have the 20 moving average. Okay, so we need 20 periods we divide it by 20, okay? And that moves. So it's mechanical because every day that comes by is going to automatically plot, okay? Same thing for the 50 moving average. I go down to the 50 moving average. We needed 50 periods in here. So it's a lot of columns. I can't even get it all on the screen. But you guys get the point. So it's the same if I did a 100 moving average, 200 moving average, what have you. All right? So that's how we actually get that data. Now let's take a look at the chart. Let me show you what this looks like. I'm going to expand the range that we have here to include the 8 moving average along with the stock price. So the blue line that you see right now, that's the stock price movement. And I'm going to slide this point over here. And now we can capture the 8 moving average in the chart. The 8 moving average is that red line that you see plotted there. And if you take a look at that red line, you can see that it's a lot smoother than the stock price movement, okay? Real smooth, and that's the point. Now, the way traders use this is that we're paying attention to how the stock price movement moves in coordination with this red line, which is the moving average. The 8 moving average is a fast indicator, okay, because it's only 8 periods. You get new data updated, quicker. 20 days, it's a lagger, it's more lagging. The longer you go out, 50 days, it's a slower indicator. So the whole purpose is to have a slow moving period, okay, a slow moving average. In this case, we're using 8, but you can use 9, 10, 5, 4, whatever you want to use, right? But what most traders use is the 8 moving average. I like to use the 9 myself, just to be a tad bit different but close, okay? So when you take a look at the price itself, the key is this, is that to the short moving average, if the price is trading under the moving average, this is confirmation of a bearish trend. So this is one application for the moving average. They tell us the trend. So you want to know what trend it is? Where's the moving average? Price is moving under that, that is bearish. Now, when the price moves on top and above the moving average, then this is bullish indicator, okay? This is a bullish trend. So it's letting you know that the trend is bullish, okay? Now, I'm going to include the 20 moving average to show you the other purpose. The other purpose that we use the moving average for is to tell the entry and exit points. How do we know when to get in? How do you know when to get out of a trade? Well, you need a trigger. The trigger in this case is going to be using a 2 moving average, 2 moving averages, okay? The 8 and the 20. A short period moving average and then a longer moving average. And when they cross, when they cross over, this tells us to get in, or it tells us to get out, or it tells us to short or to buy, right? So the dotted green line is the 20 moving average. This is the longer period. Now, the shorter moving average, which is 8, should be trading above the longer time frame. Whenever it crosses and goes under the longer moving average, this is an indication to sell, okay? So this is a sell trigger. That means, hey, we need to be selling, we need to short, or we need to be taking our profits and getting out of here, all right? That's how you know when to get out. That's the indicator. So that's going to tell us that. Now, when the moving average crosses back over, say the 8 moving average is moving back above the 20 moving average, right in this zone here, that is a trigger to buy. That's a trigger to get in, to enter, okay? And so when you get in, as you see, the price has stayed above that target the whole time. All right. So this is, it basically, again, cuts out all the noise, because if you're looking at all the wiggly lines, you're trying to figure out where to get in, where to get out. Well, if you just use the moving averages, it's going to show you that. Okay. Now, when we add more moving averages, this is going to build me cases for support and resistance. So I'm going to add in the 50 moving average. Let's kind of show you how this works. The 50 moving average is going to be this gray line here. And this gray line, you can see the price, in this case, moved right up into this 50 moving average and got rejected, okay? Now, you wouldn't have seen that rejection point, that resistance point, if you didn't have that line plotted. It's kind of invisible if you don't know to look for it. So in this case, I use it for support and resistance also, okay? So with that being said, this is how the moving averages work. Let's get into our charts so we can get the real deal. All right. So on our charts here, I'm going to give you guys a custom configuration that you can just open in your platform, and it's going to automatically do all of this for you. So you don't actually have to manually do these in here, but just in case you want to see how these work. For starters, what you want to do is go to your studies, and you go to edit studies. And then you will click in here, and then you just type in simple. Actually, let's go for exponential. I like the faster time frame to be heavily weighted on the front side, so we'll go with the exponential. So go to move average, and then you'll just click on exponential right there. Now, I already had these plotted in here to try to save us some time. So basically what you want to do is just click that over here, and then double click on it, and then make sure that the length says 9. If you don't like the 9 moving average, you can go to 8. So we have some traders that like to use the moving average number, the Fibonacci numbers for their moving averages, which you'll get like the 8, the 21, the 34, the 55, those type of numbers. Okay, but the 9, this is the one that I like to use. So when you put it in here, you just want to kind of, customize it a tad bit. In this case here, it's a white box right here. You can't see it because it's all white, but I got this color at white. You can change it whatever color you want, okay? So just make sure you just customize each line so you could differentiate between them, okay? So we have the 9 plotted here, and I have it turned on so you can see it. And as you see the price on the stock chart, you can see the price is trading right above it, okay? Now, the price never moves too far away from the average, the moving average. And you may hear traders refer to this as the mean, because average means mean. Mean is M-E-A-N, mean, so it's average, same thing. In trade and talk, we say, okay, we're waiting for the price to revert to the mean, or reversion of the mean. You may hear that. It's just saying that the price got way too far and it has to come back to its mean. So it's got to come back to this place, okay? So then you can kind of see oversold and overbought in this as well. Normally it's going to trade right on the line, okay? It's close to it, right? It moves just a tad bit. But when the price gets too far away from that line, it has to revert to the mean. It comes right back into it. And then say when it sold off too much and went too far away from that line, it has to snap back into position. And you can see that throughout the line. If it moves too far away from it, it has to get snapped back to the mean. That's just the way it moves, okay? And then you can see that the stock price itself is trading above the non-moving average. That means that the trend is bullish. Once it crossed over at this point, price started trading under the non-moving average. That was the bearish trend, okay? And it didn't happen until this point where price got back above the 9, which is, back in the bullish trend, okay? So this helps you to understand which direction you need to be trading in, okay? So that's the direction. Now, when we add in, let's go back to studies. Edit studies. I'm going to turn on the 20 moving average, the simple moving average here, and show study. Okay, I'm going to just turn this on. You guys have to, if you want to customize this, you can pause the video and you can actually put them all in individually. But remember, you don't have to, because I have a custom indicator that I built that you guys will be able to use. Okay. So I'm going to turn the 20 moving average on. I'm going to hit apply. And this is this purple dotted line, okay? I just showed you guys that in Excel. I just want to show you on the chart how you read this, okay? As long as the way that we like to see this is the shorter moving average should be trading above the longer term moving average. They should stack on top of each other, okay? And you can see right here that price snapped down right into the 20 moving average. See, that's support. Okay, right there. If you didn't have this line on here, you wouldn't have saw that. So you can see that. If you look right here, with the 9 cross under the 20 moving average, that was our sell trigger that says to get out or to short. All right. So then you look for bearish trades when the trend switches over. So although this is a lagging indicator, it still helps us to, project what kind of moves that we want to make in the future as well. All right. If you see when the 9 crossed back over the 20, that was our trigger to get in. Price stayed above. Okay, still above. All right. So let's go back to edit studies. I'm going to add on the 49. Double click. I'm going to show study. Okay. And I'm going to add on the rest of them, the 100, show study. And I'm going to add on a 200. Okay. So then you can see, basically as a trader, what you want to do is you want to take a look at different stock charts. So every stock has a different behavior, and they behave towards these lines differently. some things are clear as day. You could just look at it and tell what's happening. You could tell when you put the moving averages, you could see what's going on. It's a lot of lines. Don't let it confuse you. Now, if having the rest of these lines in here is a little complicated, then stick with the 2, stick with the 9 and the 20, okay? I like to use these so I can, pay attention to the support and resistance. So I'm going to go here. We got a lot of noise on this chart. Let me just spread it out a little bit so you can see it. Got a lot of noise in here when the price got crazy right up in here, okay? Price got crazy. What we was able to gather here is from this line right here. The gold line is the 49, which is the 50. I could change it to 50. You'll see it. In fact, let me just do that real quick. I'm going to change it to 50 for the sake of the demonstration. And I'm going to hit apply. It's going to change it a tad bit. All right. So you can see how it moves a little differently. Okay. Right here. This 50 line represented resistance up in the zone. Okay. Boom. Resistance. Okay. Came back up. Boom. It never cleared the 50 moving average. This is acting as resistance again. Okay. And once the 50 rejected it, then it got under the 100. So the 100 could be a floor, but instead it breached through, came back up, got rejected at the 9 and the 100. But as you can see, that's what we're looking at. I'm gauging how it's behaving to the lines. When it came back here, it got stopped out at the 100 and the 50, because they're kind of close together. It got stopped out, but then it popped through. That was a positive sign. That's what we was looking for. Positive sign here. Okay, came back down here, but didn't breach. Came back up. See, that's a lot of noise. How you make trading decisions with all this noise? You just pay attention to it, like I told you. Get in and get out at those points where they cross over. That makes it simple. Cross over here, get out. Cross over here, get in. That's simple. But trying to do all of this, it makes it a little more complicated. But we like to see the support and resistance lines. Now, as you see that the lines when they're trading together, the 9 moving average should be at the top. Then you should get the 20 stacked under it. You get the 49 or the 50 stacked under it. The 100 stacked under that. And then you get the 200, okay, stacked under that. That's the way it should play out. And when they're stacked like this is bullish, okay? So that's what we're looking at with that. You can see it way back here in the past. Same thing. All right, so now what I want to do is actually show you guys, if you're in the material section on the course, you can actually copy and paste the link that's in there. So you'll copy and paste the link, and then you go to your settings tab, and you'll go to open shared item, and then you'll go click in this box here. Now you can't actually click it in with the mouse. You have to hit Control and V as it tells you Control V to paste it in. So what I'm going to do is actually copy that, and I am going to drop it in here, and I'm going to hit preview. Okay, and it has right here, it has it loaded right here. I'm going to hit open, and then you can rename it, okay, to whatever you want. So you can just rename it. I'm going to call it the WSJB Elite Move Average. Okay. Bingo. So now that it's loaded in the chart, we need to actually arm it. And what I'm going to do is go to Edit Studies. And we're going to actually look for it here. Just put WSJB. And bingo, it's right there. Hit Add Selected. And the other ones, you can actually remove those. Okay. You can move those. And we have that in here. Now, what you want to do is double click this. And you can see, again, this is a custom indicator that I built, but you can go in here and you can customize it even more. What I like to customize is the signal and the signal exit. The signal line is letting you, this is basically going to give us an arrow that's going to make it easier for you to see, where to get in and where to get out, basically. So for this one, I like to use a green. You just make this green arrow, and then make this number 4 for the width. And then for signal exit, this is for the sell signal, and we're going to make that red. Any color you want, okay? All right. Then we're going to hit OK. Then hit apply. and then hit OK. Bingo. Here is the Wall Street Jap Boys Elite Moving Average setup. This is the one that you guys will see on my charts that I use. This is pretty cool. As you can see, there are points where there are arrows to buy and to sell. Now remember, there's no indicator that is 100% perfect. So don't, have the false expectation of that. But these things work out more than they don't. So there are some false positives when things get weird, but for the most part, they work. Okay, you can see right here, I have this red arrow that says short. Boom. Okay, you see the trend held all the way down. That's profit making play right there. Okay. Here we have a little green arrow right there. I don't know if you can see it, but there's a green arrow. If I spread it out a little more, you can see it better. And it says to get in. So this was a trigger to buy as well. So this trigger to buy, boom. And again, it's basically, the lines that we plotted, when the 9 moving average is moving above, crossing over. That's that, entry trigger. Now, with this tool that I have created, it is pretty colorful. The 9 moving average itself is actually, as you can see, it has points of green and red. And it's just basically some custom coding that I put in here for the trend, basically, to see the trend within a line itself. It's not necessary, but this is something that I like to do. It's add some customization to things. So anyhow, there you guys have it. This is your custom elite moving average indicator. And you can just arm it on your charts, and you're all good to go. So I hope you guys really enjoyed this class, and I'll see you in the next Technical Analyst course. Peace.